Akash, hi, morning. I want to bring you in on this discussion. Do you think it is going to be a little difficult for the finance minister to pull off a market-friendly budget today?
No, I think the finance minister expecting, I think the market expects him to deliver decent fiscal consolidation. So if he can show concrete and credible action to reduce the fiscal deficit and, more importantly, get people to regain confidence that the government is in control and is in charge, I think expectations are actually reasonably low. I know the markets had a huge run before the budget, but that's more because of liquidity and global reasons, not so much, I think, expecting some type of miracle from the finance minister. I think everyone understands the political considerations he's under. We all hope that he will do significant policy reform in terms of cutting subsidies, etc., etc. But I don't think the market realistically expects him to do very significant amounts of that type of policy reform. I think if he can just keep the government expenditure growth under control, bring in a fiscal deficit number of 5% and have credible assumptions, I think the market will heave a sigh of relief that expenditure hasn't gone out of control and we are back to a path of at least trying to control the fiscal deficit.
From your client perspective, how important is the Union Budget 2012? Do they even track the budget?
Yeah, of course. I think that for a lot of people this is a very significant event, more so than normal, because of this whole perception around India globally that the government lacks policy paralysis, that government is not taking decisions. So I think this is a very important signaling document. I mean, it's an important document anyway, but it's even more this year because people want to see concrete action, want to understand what is the direction of economic policy. Does the government understand that it has to get fiscal consolidation in place, that the government is willing to take decisions? And also with the changed political framework in India post the state election, again, people want to see how does that affect the government? Does it lurch towards populism? Does it lurch towards more rational economic decision making? I think it's a very important document from a signaling perspective, which a lot of people are looking at to get a sense of what India will look like over the next couple of years and what is the direction of economic policy making this government will take in the next 2 years.
Three things, if you hear from the finance minister today, that will make you nervous.
That will make me nervous. One would be if government expenditure grows more than 10%. Number two would be some type of lurch back to 1980s style decision making, which is that we'll raise taxes on more affluent people, either bringing back taxation on capital gains through equity markets or raising special tax on corporates, etc., etc. And the third would be if they underprovide once again for subsidies. For example, if you see another figure of 25,000 crores, let's say, on oil subsidies, or 50,000 crores only on fertilizer subsidies, which again show that they're massively under budgeting for the subsidies. So I think this budget is all about credibility also, in the sense that the government of India's numbers have not been very credible in the last couple of years in terms of what they've given in the budget. So I think credibility of the budget is important, what number he delivers. But I would really get quite nervous if they start going back to 1980s and trying to raise taxes and trying to use that to fund massive increases in government spending. I think the most important thing for me is if government spending has to be credibly shown as growing less sub 10%. If they can, in a credible way, say government spending is less than 10%, I think that automatically will lead to fiscal consolidation. It will automatically give people a sense of relief that they have got the message from the markets and from the electorate that just wild abandon on spending doesn't really get you much beyond a point.
Akash, since the country lacks a clear, sound policy on oil, do you expect to hear something on oil subsidy?
One hopes that they do something like what the economic survey has said yesterday, which is a fixed subsidy on diesel, like almost like a nutrient-based subsidy, so that what the government's fiscal burden will be and they concretize and freeze it. I think they want to do a lot of stuff on the oil subsidy side because obviously they realize that oil prices are not coming down, and with the rupee is that this is a ticking time bomb. But I really don't see where is the political space they have to do things like diesel price hikes or decontrol of diesel prices or LPG and kerosene price hikes. Because if the TMC or their allies are going to create a hue and cry over effectively what is a 2,000 to 3,000 crore increase in railway fares in a budget of 130,000 crores, and threaten to bring the government down. I'm not sure there's much political space available to the UPA to actually significantly increase petrol prices. So I'm hoping that they, do the stuff we've talked about, raising diesel and LPG and kerosene prices. But I frankly have limited hope on that, because I don't think they have the political space to do much. And frankly, if he announces something, people will be waiting to see if they can implement it and go ahead with whatever reform they announce on the oil side. I hope they announce something, but the market will say, show me first, because even if they announce, let's say, diesel decontrol or significant hike in diesel and LPG kerosene prices, the market will want to make sure that that is something they can get through and actually implement before they fully believe it. So I think they want to do it. I don't think they have the political space to do so.
After a 16% appreciation in this calendar year, what's been your portfolio approach, and where, to your mind, value is now missing?
No, I think we are, I think the market's stuck in a trading range, in the sense that, unless the government comes with a truly something path-breaking in this budget, I think the upside from here is a little, in the short term at least, a little limited, in the sense that I think at significantly higher levels of the market, the supply of paper is going to be just incredible. I think half of corporate India wants to raise equity of some form or the other, because they haven't raised money for the last 2 to 3 years, and the government as well as corporate India has significant equity capital raising needs, I think. So the supply of paper will be significant, which I think will cap the market on the way up, as well as valuation, and the fact that I think the market is no longer that cheap, given the type of earnings outlook we expect. So I don't think the market has massive upside from here, unless the budget is truly path-breaking and something which is far more aggressive in terms of decision-making from the government. On the other hand, the downside also I don't think is dramatic, because I think at lower levels there are a lot of people who have missed out this rally, who are underweight India, who are waiting for a pullback to put money in. So I think the market's stuck in a trading range, and we're somewhere in the middle of that range right now. And I think that's where we're going to be for some time, because both on the way upside, I don't see a breakout on the way up, and I don't see a breakdown either dramatically. So I think we're somewhere here.
Some of the key stocks you own at Amansa are Bajaj Auto, Oracle, Lupin, Thermax. Are you likely to remain invested in them irrespective of the budget outcome?
Yeah, I think our views on these specific stocks, I'm not saying whether we own these stocks or not anymore, but our view on the stocks we own are genuinely a 2 to 3 year view. So normally we would not take a view on an event like a budget, and that would not normally change our long-term thesis on the companies we own. So frankly, we don't really trade around the budget much. We have 20 stocks. We own them for typical 3-year holding horizon. We normally will not trade or react to something like a budget unless the government dramatically changes the economic fundamentals of a particular sector or company because of some policy change, which we normally don't invest in companies which are so dependent on government policy risk anyway. But so normally we very rarely would have any significant change in our portfolio because of what the budget has or has not done.
Akash, do you think Reserve Bank of India has done an incredible job of managing inflation, and now the finance minister only needs to focus on growth? Because last time he had 2 challenges: managing inflation, or controlling inflation, and managing growth.
Yeah, no, I think just to say, I think the problem in India, if you look at we were growing at 9% in 03 to 08, maybe 1% of that was too high because it was the whole world was on steroids then. So 8 was our real rate of growth. 8 has dropped to 7 or below 7 because we've chopped off 500 basis points from the investment rate. So you've got to get the investment rate back up, which is a combination of one, improving corporate India's confidence around the government, regulatory environment, land environment, etc., etc. That's one part of it. And second is to get our national savings rate up, which is linked to why everyone is so focused on the fiscal deficit, because the entire delta on why our savings and investment rate, or why our savings rate has dropped by 500 basis points, is because government has gone from being a saver to a negative savings level. So you've got to focus on 2 things. One is get your investment environment positive again, which is get the animal spirits of corporate India back, get them more confidence on government policy, get them more confident on getting regulatory clearances. And second is by reducing the fiscal deficit, get your savings rate up. Because if you don't get your savings rate up and you try to accelerate investment, you will blow out your current account deficit. So you need to get the investment intentions, improve the investment environment, as well as get your savings rate up. The combination of both is what will get you back to 8% plus growth. So you have to focus on both. He has to focus on the investment environment, improve confidence, as well as reducing fiscal deficit. And I think that's everyone knows what needs to be done. The question, I think, is does he have the political space, perceived or reality, or does he say that I'll go for this is an important budget, I don't care, I'm going to go and make changes and we'll fight it out in Parliament. We'll see what they do.